After starting out the new year with a bang in January, investment funds in Canada came back in February with another set of strong performance. Notably, 23 of the 24 Morningstar Canada fund indices that track equity categories had positive returns for the month. I'm here with Salman Ahmed, Morningstar Canada Fund Analyst, to discuss these results. Now, Salman, the best performing category last month was European equity with a 5% return. This reflected some of the stock market returns on some of the biggest markets like Germany, France, the UK.
Yeah, a lot of this has to do with Greece getting its second tranche of funding. So there was a bit of speculation early on whether the big European powers, namely France and Germany, would approve this funding or not. Mm-hmm. But once Germany passed that through and Angela Merkel signed off on it, it really boosted the markets across the board, really, in Europe. Like you said, Germany, France, UK, all did very well over the month.
Mm-hmm. And the second best performer was the Japanese equity category, with a 4.6% return.
Yeah, Japan is primarily an export economy. So when the yen is strong, their products aren't really priced competitively in the rest of the market. So it's good for the economy when the yen actually depreciates, which is what happened in February. The yen depreciated a fair bit, and because of that, the stock market was rewarded because investors feel as if those producers can price their products competitively in the market once again.
Mm-hmm. And even despite those currency effects, the yen depreciated close to 8% against the Canadian dollar. Yet for Canadian investors, they're still one of the best performing categories last month.
Exactly, yeah.
Now, as far as Canadian equities, the returns were still fairly good, but they lagged a little bit behind their global counterparts. The S&P TSX Composite returned 1.7%, which was the same return as the Canadian equity fund category. Mm-hmm. And the biggest contributors to the performance were the financial services and resources sectors.
Yeah, on the energy side, what's happened is there's been an increasing amount of rhetoric coming out of Israel and Iran. And Iran is one of the larger producers of oil in the world, and it has a Strait of Hormuz where a lot of the oil from the other Middle Eastern countries flows through. Mm-hmm. So, uncertainty whether they would clash or even escalate that level of violence would really cause uncertainty in the energy markets, and the price of oil was up significantly over the month.
And that was good for our Canadian oil producers.
Yeah.
Now, the worst performer last month was the category precious metals equity, which dropped 1.8%. Now, what happened there?
Yeah, in precious metals, so gold and silver were fairly flat for much of the month, but during the last day, there was a conversation between Bernanke and Congress, and in that conversation, Bernanke stated that he felt that U.S. growth was going to be in line with the Fed's expectations, and so investors feel as if there's less likelihood of the Fed continuing to do their quantitative easing, QE3 or QE4, or more buying of bonds, and because of that, the expectation on inflation reduce, and gold and silver are considered inflation hedges. So based on this information, the price of those dropped a fair amount.
Thank you, Salman. And for more on Morningstar's survey of fund performance for the month of February, please click on the link on the right side of the video player. And check back with us regularly for more news and updates.